See, we are in the first chapter of second PU accountancy, that is not-for-profit organization. So we have studied in the first year PUC that sole trading concerns, they prepare profit and loss account. Why do they prepare profit and loss account? Profit and loss account is prepared by a sole trading concern to know the result, that is profit. Profit and loss account is prepared to know the net profit of a sole trading concern. But there are lot of business concerns which are not aimed at earning profit. They are established for the purpose of rendering useful services to the society. Rendering services is the main objective of certain organizations, and those organizations are called not-for-profit organizations. For example, schools, hospitals, religious organizations, clubs, welfare societies, and the societies which are established for the welfare of art and culture. So these are the organizations which are established to render services to the society. Service is the main motto of these organizations. How this NPO is organized? The contributors to the NPO are called members. In a sole trading concern, proprietor, he contributes money into the business as capital, but here in not-for-profit organization, the members, they contribute money, and these members, they elect the trustees who look after the affairs of not-for-profit organization. And these trustees, they are accountable to the members, they are accountable to the society for the utilization of funds which are collected by the public in the form of subscription, or the amount collected by the public in the form of donations. So here, rendering services is the main objective of NPO, and preparing of final accounts, that is receipts and payments account, income and expenditure account, and the balance sheet. Preparation of financial statements is mandatory. It is a legal requirement of NPO to maintain the proper records, that is receipts and payments account, income and expenditure account, and the balance sheet. Now let's look at the meaning of NPO. So not-for-profit organization, they refer to those organizations which are formed not for earning profit, but to render useful services to the society, such as promotion of education, health, sports and games, science and technology, culture, religion, etc. The best examples for not-for-profit organizations are schools and colleges, sports clubs, hospitals, libraries, charitable institutions. NPO is established without any profit motive. From the meaning we can understand that the NPO is established without any aim of profit, and these NPOs, they are established to provide services to the society. There are two important key words in the meaning. They are not aimed at profit. They are established for the purpose of rendering services to the society. And these NPOs, they do not manufacture any goods. They do not sell any goods. There won't be any credit transaction. Then how the expenses are met by not-for-profit organization? What is the source of income? The subscriptions received by the members, the members are the contributors of this NPO. Whatever the amount received as a contribution annually from the members are called subscriptions. And there may be donations. For any service-based organization, people may give donation, and those donations are the income for not-for-profit organization. And the government, by looking at the services of the NPO, the government may give grants to these NPOs. That is called grant in aid. All these things, they constitute the income of NPO. Then how the records are maintained? Receipts and payments account, income and expenditure account, and the balance sheet is prepared. It is the statutory requirement of NPO to prepare the financial statement. Why we are preparing these financial statements? Because these statements are prepared to have a control over the utilization of funds. And whatever the financial statement prepared, that is receipts and payments account, income and expenditure account, and the balance sheet, they have to be submitted to the statutory authorities called Registrar of Societies. What are the features of NPO, or what are the features of not-for-profit organization? Services to the society. Services to the society without any discrimination. It is the first important feature of not-for-profit organization. There should not be any discrimination by the NPO with regards to caste, creed, community, and the services to the society must be given without any discrimination. And the second important feature is free of cost. All the services which are provided by the NPO should be free of cost or at a nominal cost. There should not be any objective of earning profit. Of course, to run an organization, there are expenses, there are expenditures, and these expenditures can be made good by collecting a nominal cost or nominal fees from the public. And third important feature is organized as charitable trusts or societies. These NPO, they are established or organized as charitable trusts or charitable societies. Subscribers to the not-for-profit organizations are called members. And the fourth important feature is the affairs of NPO is managed by managing committee or the executive committee. And the next feature is normally the NPOs, they do not undertake any business or trading activity. Their main objective is to provide service. That's why they do not undertake any business or trading activity. But there is an exception. Take for example, there are hospitals where these hospitals, they may run the canteen. To run the canteen or to run the beauty parlor, it is not the main objective of NPO or the hospitals. Still, for the benefit of the members, they may start canteen, they may start beauty parlors which may help the member, and from them the nominal fees are collected, and whatever the result of the operation, that is called profit, and that profit will be credited to income and expenditure account. Then what are the sources of income to the NPO? Subscriptions are the best source of income. Donations, grant in aid, legacies, income from investment, they are the sources of income to the NPO. Then what are how the funds are raised? The funds raised are credited to capital fund or general fund. The donations which are collected, the funds raised are credited to capital fund or general fund. Here in NPO, we do not have any term called capital. It is the service-based organization. That's why we have capital fund on the liability side of the balance sheet, and whatever the funds raised are credited to capital fund or general fund. And the surplus, the result of operation, is not distributed among the members, they are added to the capital fund. The members, they cannot withdraw the surplus. They belong to the organization itself, they will be added to the capital fund. And these NPOs, they earn reputation on the basis of contribution to the society, not on customer satisfaction. In profit organization, customer satisfaction, that itself is the main criteria to decide the goodwill of an organization. But here in NPO, the contribution to the society is the basis to judge the reputation of an organization. And the next one, accounting information are for present contributors and the potential contributors and according to the statute. They are prepared according to the statute, they are prepared for the information of present contributors and potential contributors. Then what is the need of preparing or maintaining accounts under NPO?
To avoid misappropriation of funds, to keep track of income and expenses relating to a particular period, to keep track of income and expenses. And to know the financial position and of course these accounts are prepared to ensure proper utilization of funds or government funds, proper utilization of funds. And it is a legal requirement also. It is a legal requirement. To satisfy the legal requirement, we have to prepare the financial statements at the end of accounting period. So what are the books maintained under NPO? The important books maintained under NPO are cash book. Cash book is prepared. Cash book is the summary of all cash receipts and cash payment. And journal may be prepared. In this journal, we are going to write the non-cash transactions or the transactions other than cash, like depreciation or bad debts. These items are entered in the journal. And third, ledger account may be prepared. The ledger accounts are prepared. The ledger accounts of incomes, the ledger accounts of expenses, the ledger accounts of assets, ledger accounts of liabilities are prepared under NPO. Then register of members. The register of members is maintained by NPO. Here the total number of members are mentioned in the register, and if there are any outstanding subscription or if there are advance subscriptions, they are mentioned in the register of members. So here cash book is maintained to record all the cash receipts and cash payments. Journal is prepared to record the transactions which are other than cash transactions, like depreciation, bad debts. Ledger accounts are maintained, the accounts of assets and liabilities, expense and incomes, and the register of members is maintained to record the total numbers, to record the outstanding subscription, and maybe to record the advance subscription. See, three important accounts are maintained by NPO. The first important account is receipt and payment account. And the next important account is income and expenditure account. which is prepared from the recent payments account and other information. And third, balance sheet. Recent payments account is prepared from all the ledger balances. Of course, when a firm or NPO is following double entry system, definitely there will be a trial balance, and from the trial balance, we can write the balance sheet, we can write we can pick the items from the trial balance and we can prepare the balance sheet also. So recent payment account is prepared to record all the receipts and all the payments, receipts of cash and of course from bank also, and payment of cash and even the bank items, they are recorded in the recent payments account. Income and expenditure account, it is an account to know the result. Knowing the result is very important because there are funds which are donated by public, we have collected subscription, we have collected government grants, and all these grants, all these donations, all these subscriptions, they are utilized. So what is the result? Whether the income is more or the expenses are more related to a particular period, it is ascertained by preparing income and expenditure account. And of course balance sheet, you are very much familiar with this account. Balance sheet, it is a statement of assets and liabilities of not-for-profit organization. The difference between assets and liabilities is called capital fund. Right. Let's be familiar with some of the items or some of the terms which we use while writing the accounts or while preparing the financial statements. We come across a term called capital fund. Capital fund consists of the capitalized receipts such as donations, legacies, life membership fee, entrance fees, etc. So it is the difference between assets and liabilities of a not-for-profit organization. So in a trading concern or in a profit organization, we normally use the term called capital. But in NPO, we do not use the term called capital, we use the term capital fund. The difference between assets and liabilities of NPO is called capital fund. What exactly is the difference between these two? Capital fund, the term capital fund, it is used by not-for-profit organizations. And the term capital is used by profit organizations. Then, capital fund represents the capitalized receipts. Capital means it is the amount invested by the proprietor of the business or the partners of the firm. Capital fund, they does not belong to the members. Members, they are the contributors to the capital fund, they are the contributors to the subscription, they are the contributors to the business or not-for-profit organizations. Even though there is a surplus, it does not belong to the members. The capital fund does not belong to the members, whereas the capital, they belong to the owners. The capital fund, it cannot be withdrawn. It cannot be withdrawn by the members or it cannot be withdrawn by the trustees, whereas the capital, it can be withdrawn by the proprietor or it can be withdrawn by the partners. The next important term which is used by an NPO is subscription. What is subscription? Subscription is the membership fee paid by the member of NPO on annual basis. It is the contribution by the members on annual basis is called subscription. To the members, to run any NPO, there must be some certain income, and this income can be generated by the contribution from the members or the membership fee. The next important term used by an NPO is legacies. Legacies are the gifts or donations received by an NPO under a will on death of a donor. So they are the gifts or donation received as per will. That is very important. As per the will of a donor, when a not-for-profit organization gets any property or any amount, they are called legacies, and they are non-recurring in nature. That's why they must be entered in the balance sheet of not-for-profit organization because they are capital receipts. The next important term used by NPO is endowment fund. Endowment fund is the money or property given by a donor as a gift to provide a permanent source of support to a not-for-profit organization. They are the capital item, hence they should be entered in the balance sheet. The next term which is used by NPO is honorarium. Honorarium is a payment made to a person for the services rendered by him to the concern. The next important term is entrance fees. Entrance fee, it is the admission fees received from the members of not-for-profit organization. It is the revenue in the absence of clear instruction. Then comes special fund. If there is a fund for a specific purpose, then they are called special fund. Any expenses connected to the special fund are to be deducted from the special fund. For example, tournament fund or prize fund. When there is a tournament fund, any expenses related to this tournament, it should be deducted from the tournament fund itself. It should not be entered in the income and expenditure account. If there is a prize fund in an NPO, any expenses related to that prize should be deducted from the concerned fund, that is prize fund. The next important term used by NPO is donation. Donations, it can be collected by the NPO, but we are recording them. We have to see whether the donations are specific donations or general donations. Specific donations are the donations which are given for a specific purpose, like for the construction of swimming pool or the construction of pavilion. These are the specific donations, hence they should be entered in the balance sheet on the liability side because they are the capital items. There are general donations. General donations are the donations which are received for a general purpose. It can be used for any purpose. There is no specific instruction. Then life membership fees. Life membership fee is an amount of membership fee received in one lump sum. Instead of collecting the membership fee every year, we can collect the money in lump sum. They are called life membership fee. They are the capital receipt and hence they must be added to the capital fund. I have been telling while analyzing the various terms which are used by NPO, I used to say capital items and revenue items. Before we start the problem. Before we go to the practical session, let's understand what is a capital item and what is a revenue item. To decide an item as capital or revenue, the nature of that item has to be understood. The revenue items should go to income and expenditure account. Capital items are included in the balance sheet. So let's understand what constitutes a capital receipt, what constitutes a capital expenditure, what is the meaning of revenue receipts, and what is the meaning of revenue expenditure. Capital receipts are the receipts. As I told you, a transaction or an item is decided by its nature whether it is a capital item or revenue item. So, capital receipts are the receipts which are non-recurring in nature. Capital receipts are the receipts which are not regular in nature. Normally they are a huge amount, hence they should be entered in the balance sheet of not-for-profit organizations. The best examples are life membership fees or sale of fixed assets or special donations. These are the examples of capital receipts. So remember, capital receipts are those receipts which are non-recurring in nature, they are not regular in nature, they involve a huge amount. Then what are revenue receipts? Revenue receipts are the receipts which are recurring in nature, which are repetitive or which are repetitive in nature. Any receipt which is recurring in nature should be considered as revenue receipts. They are the small amounts normally and they are regular in nature and they must be entered in income and expenditure account. Examples may be rent received or interest received. These are the examples for revenue receipts. Now let's come to the expenditure. What are the capital expenditure? Capital expenditure is an expenditure whose benefit is not exhausted in 1 year. The benefit is not exhausted in 1 year or it is available for more than 1 year. Take an example of cost of fixed assets or addition or expansion to any fixed assets or any expenditure connected with the purchase of fixed assets. They are the best examples of capital expenditure. Capital expenditure, they must be entered in the balance sheet. They are the balance sheet items. Revenue expenditures are the expenditures whose benefit is exhausted in 1 year. These are the expenses. The benefit of which is exhausted in 1 year. They are incurred to run the day-to-day business. Examples may be salary paid, printing and stationery, rent paid. These are the examples of revenue expenditures. And there is one more term called deferred revenue expenditure. Deferred revenue expenditure, they are the heavy expenditures of revenue in nature incurred for getting benefit whose benefit may be extended for 2 or more years. They are revenue in nature, they involve huge amount, but even though they are revenue in nature, their benefits may extend to 2 years or 3 years or more years. So any expenditure, any revenue expenditure whose benefit is spread over 2 years or more than 1 year, they are called deferred revenue expenditures. The examples may be huge amount spent on advertisement, or the heavy repairs to any old assets, or preliminary expenses, or loss of extraordinary nature, if any. So these are the examples of deferred revenue expenditure. While working out the problem, we get most of the items as capital receipts or capital expenditures, revenue receipts and revenue expenditure. So 2 points to be noted while analyzing the nature of a receipt and expenditure. The first one is not exhausted, exhausted in 1 year. After making the payment or after spending, if the benefit is exhausted in 1 year, it is revenue expenditure. If it is not exhausted in 1 year, it is called capital expenditure. Now let's come to the receipts. When the receipts are not recurring in nature, not repetitive in nature, they are called capital receipts. When the receipts are recurring in nature, they are called revenue receipts.